With the stock market in the midst of one of the biggest bull markets in history, America's top CEOs are set for a once-in-a-lifetime pay bonanza. However, there is a twist. An Associated Press analysis of CEOs in the Standard & Poor's 500 index shows that total compensation in 2009 actually fell for a second year in a row. What gives? Well, corporate boards did in the form of generous stock options. It's deferred wealth that, when exercised, could give CEOs their biggest payday ever. The pay package for Ford CEO Alan Mulally illustrates the point.
Mulally's stock compensation hit at the perfect time, just as the market was bottoming in March of 2009. Ford shares then were trading at $1.96, and the company assigned a value to his stock options of $5 million. Today, those options have a paper gain of 10 times what they were back then.
Options are just part of the picture. Performance-based cash bonuses help paint the rest of the canvas. The AP sample found them to be the fastest growing component in compensation, and for some, the easiest to achieve. Why? Many companies simply lowered the bar on the goals CEOs had to meet. And that doesn't sit well with Bruce Ellig, an expert on executive compensation.
The problem I've got with these goals are absolute goals. They're stated in absolute dollars. To me, it's far better to talk in terms of relative goals, relative to your competition, that you outperform your competition. You don't have to restate your goals then, because if it's a down year, you could still outperform your competition and do well.
The highest paid CEO in 2009 was Yahoo's Carol Bartz. She received a $47 million compensation package during her first year on the job. 90% of her pay came from stock awards and options. The recent public outcry over executive pay did not ring hollow at many companies. The AP analysis found that some boards cut back on perks, like the use of corporate jets. Guaranteed cash bonuses were also less frequent. 320 companies in the S&P 500 that filed proxy statements with federal regulators were scrutinized in the AP survey. Mark Hamrick, The Associated Press.